Good morning and welcome to this Wednesday, May 6th edition of Trading Places Live at earningsbeats.com. I'm Tom Boley, Chief Market Strategist here at Earnings Beats, and I'll be your host for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. Oh, wow, we had quite a day yesterday, had strong action throughout most of the day, and then we saw a little bit of sell-off late in the day. Market tried to rally again, and now, this morning we've got the Adp Employment Report out, which was horrible, as everyone I think was expecting. But it's not every day you run into a employment report that shows we lost 20 million jobs. The expectation was for a loss of 20 million jobs. We came in with a loss of 20.24 million. So the number was not good. Obviously, it's not going to be good on Friday when we get into the non-farm payrolls. But the market knows this. It's not like the report is something that all of a sudden we have to now figure out what to do with. Everybody knew it was coming. And so last time I looked, I think futures still were higher, although they have come down off of earlier highs. I'll give you that the latest here with just a little under 30 minutes to go. Yeah, Dow futures right now up about 100 points. So we'll get into all that. Before I do, I want to show you one other thing, just a couple of announcements before we get going here. So anybody who's new to Earnings Beats, I'd like to first point them to our homepage, earningsbeats.com. Please sign up and subscribe to our free Earnings Beats Digest. Comes out Monday, Wednesdays, Fridays. This morning, we got a lot of potentially great earnings that are going to come up after the close today. Peloton is going to be one of them, PTON. I'm really anxious to see what kind of report they have. That company, by the way, there are a ton of shares short. So you talk about a massive squeeze. If they come out with better than expected numbers and gap up, it's going to force a lot of shorts to think about covering. So Peloton is going to be one that's very closely watched after the close today. But I actually talked about one that, I like a lot more. I just think it's got a lot more upside potential because the stock, after showing tremendous strength in March and April, has pulled back quite a bit lately. So I think it's got an opportunity. So anyway, sign up for that Earnings Beats Digest so that you can keep up to date with a lot of these companies. A lot of these articles in the EB Digest talk about earnings, relative strength, accumulation distribution, a lot of things that are really important in this environment right now. So check that out. Make sure you sign up if you're not already a subscriber. Also want to point out, if you haven't seen this yet, I had a guest appearance on Your Daily 5, a new stock chart show that comes out every day. I believe it is aired at 1 p.m. Eastern every day. I know the one I did was. But anyhow, if you haven't seen it, just go to YouTube and type in Stock Charts Your Daily 5, and you'll see this come in. Go back and check that out. Talked about the S&P 500. I talked about the VIX, gold. Talked a little bit about accumulation distribution and how I've seen that playing out here over the past couple months. And then finally gave performance on our model portfolio at Earnings Beats, which has been off the charts really since its inception back at the end of 2018. I know as of a couple of days ago, the model portfolio was up over 50% since inception. The S&P 500, inception, by the way, was November 19th, 2018. The S&P 500 is up 5% in that same time frame. So 45% or percentage points of outperformance is pretty significant. So you definitely want to check out that Your Daily 5 if you haven't already. All right, let's talk a little bit about what happened yesterday. The Dow, S&P, NASDAQ, it was it was a gap up, and it was one of those trend days where it just seemed like want to keep going higher all day long. And then late in the afternoon, we got some selling come in. And, the NASDAQ in particular was on the verge of trying to make this breakout above 9,000 and reversed off of it, came back down. So we're seeing some strength again this morning. We'll see whether or not we can clear some of these key levels. For the Dow, a break above 25,000 would be incredibly bullish. The S&P, 2950, but certainly that 3,000. And we were talking about a couple of big psychological levels there, 25,000, 3,000, NASDAQ 9,000. It means something psychologically to break through these big numbers, these round numbers. Mid caps also came off their earlier highs. Small caps did the same. But if you look across, all 5 of the indices did finish higher yesterday. So that was the good news. As far as sectors go, 4 of these sectors, we've got healthcare, technology, utilities, real estate. These were the 4 that led yesterday. Nice to see healthcare and technology back up. These have been the 2 themes since late February, early March, in my opinion. This is where money has consistently rotated toward. But you can see healthcare in particular has just been going sideways for the past 2 to 3 weeks. So we had a huge move up from mid-March through mid-April. And since then, we've been consolidating. A breakout on the XLV would be very bullish after a period of consolidation. So watch for that. Technology tried to make a breakout, couldn't. It too has been mostly consolidating sideways. Utilities and real estate actually have been working their way lower, but they saw a little bit of a bid yesterday. Financials, probably the biggest disappointment. I'm going to talk a little bit more about financials in just a minute and why I think they've been a disappointment. But technically, we had to move up. Haven't been able to take out that second week of April high. You can see we tried to do it a few days ago, last week. Couldn't quite get there. And now we've been pulling back, and we're below both the 50 and the 20-day moving average as we start the day. I think today is going to be a real make or break kind of a day for the financials. Again, I'll talk about that in just a minute. 10-year Treasury yield, currently higher. Let's get the latest. This is up, it's up to 0.72. I've been waiting to get this move on the 10-year Treasury yield above the 20-day moving average, and we're trying to make a point today. I mean, this is a statement right now that the yield is trying to make, getting up through the 20. If it can break up above it, hold it, and then consistently close above it and start trending higher, you can see this 20-day is starting to turn higher. The only other time during this pandemic it's done that was back in mid-March. It tried to do it and rolled back over. So if we get up above the 20 and we fail, we go right back down below the 20. That would be, maybe a check mark in the bears column. But if we can get through this 20-day and hold it and begin to trend higher, I think this is a very, very strong signal for the bulls. So this is going to be something to watch. And this is coming on the heels of a horrible economic report this morning with the Adp Employment Report. So normally bad news, bad economic news, you would think that yields would be moving down. Instead, they're moving up. So that maybe tells you something about what the market is doing right now. It's looking ahead. It's not looking at what's going on right now. Very important distinction. All right, let's keep moving on. I'm talking about the 10-year Treasury yield, talking about the XLF. Let me show you something interesting here. So as we go in here to talking technically today, I just want to point out, this is a 10-year weekly chart, XLF versus the S&P 500. So it's just a relative chart. And you can see since 2011, we rose, went sideways, we rose on a relative basis, kind of went sideways, pulled back, and then really fell apart here of late. If you look at the 10-year Treasury yield and you just, kind of let your eye wander back and forth between these two charts, they're not exactly mirror image, but they're pretty darn close. I mean, financials looks like outperforms the S&P 500 when we're getting a move up in the yield. You can see these big moves up in the yield coincide with big moves up in the 10-year, in the XLF versus the S&P. So we get relative strength from financials when the yield's going up. Well, in 2018, we had a little bit of a negative divergence, higher price moving back down there. And then since late 2018, you can see 10-year Treasury yield just continues to drop, and really a lot here in 2020. We were up near 2% to start the year. Now we're at 0.7. So you got to see that financials on a relative basis, not a great place to invest when you've got the yield falling like this. So at the bottom is the correlation. So you can see that they kind of go together, and that's what the correlation here tells us. Almost all of the correlation readings for the last 10 years have been positive, going back, looking at these two different charts. Occasionally we get, negative correlation or inverse correlation, but for the most part, we're above the zero line. And a lot of times we're up above 0.75. So it's telling us that while it's not perfect positive correlation, it's pretty strong positive correlation. So if you have an idea of what's going to happen with the 10-year Treasury yield, that gives you a leg up in terms of whether or not you want to be in financials or not. Okay, so that's, as the 10-year Treasury yield breaks above the 20-day moving average, which I just showed you, that means that we should be seeing strength in financials. However, We've been going up on the 10-year Treasury yield. Look at the last 4 or 5 days. See how we've been moving up? Look at the financials last 5 days. This is financials relative to the S&P 500, going down every day. The yield, for the most part, has been going up every day. So in the very short term, we've had this disconnect between what's going on in the Treasury market and what we're seeing in terms of relative performance by financials. Now, we're getting a big jump in the TNX. I would expect financials would have a great day today. But I just wanted to point this out because for the last 5 days, for whatever reason, financials are ignoring the fact that the 10-year Treasury yield's been going higher. They could play catch up in a big way today. We'll see. All right, let's keep moving on here. Also, I wanted to talk a little bit while we're in this talking technically. This is something that's really been big for us at Earnings Beats for the last couple months. Identifying a strong accumulation distribution chart list, having a lot of companies on this chart list that have been showing accumulation during this pandemic, as opposed to a weak accumulation distribution chart list, which has been showing a lot of weakness. Now, for a period of about a week, last week, it may have even been the week prior, maybe at the tail end of that week and into last week, we saw weak accumulation distribution stocks rebounding better than the strong. Strong were still performing pretty well, but the weak were doing better. And I think what was happening is, like I showed you in healthcare, where healthcare went up and then consolidated for a couple weeks, and now healthcare led again yesterday. We're starting to see a little bit more rotation back there. I think that's what's been going on in the market and why the weak AD was outperforming for a while. Last 4 days, though, things have changed again. Strong AD charts have done much, much better. The stocks that are on the strong AD chart list have been on fire. Just going to give you an example here. Look at the top. This is roughly the top 25, and we go all the way down, and we're at 6%. That's number 25 out of 372 stocks on this chart list. The 25th best was still gaining 6%. Look at the weak list. If I look at the same thing, by the time you get down to about the 25th, you're only at 2.53%. And if we flip this on the week and you look at what's been going on the downside, you go through the top 25 and you can see we're still at minus 5.59%. But on the strong, if we flip it, by the time you get down to the bottom, top 25, you're already down to 2.49. So you can see that the overall performance in the strong AD chart list has been much better, was much better yesterday and has been now for the last 3 or 4 days. We're starting to see that the market rotate back to those winners, which I think is really important. Let me just give you numbers for yesterday, kind of going along the same lines as what I'm showing you here. On the strong AD chart list, 372 stocks. And of those, yesterday, 40 of them gained at least 5%. 94 of them, just over 25% of them, gained at least 3% yesterday. We didn't have that good a day on the market yesterday. I mean, we were up, but the Dow was up 0.5%. NASDAQ was up a little over 1%. 25% of these strong AD charts companies were up more than 3%. 18 of them were down 3%. And only 9 of them were down 5% or more. So the odds of picking winners in the strong AD chart list, much, much better than the weak AD chart list. Now, the weak AD chart list with 268 stocks, 9 of them gained 5%, and 19 of them gained 3%. So whereas on the strong AD chart list, more than 25% of the stocks gained at least 3% yesterday, on the week, it was only about 7% gained 3%. So you see the difference between the strong and the weak chart lists? You've got a much better idea. So these are chart lists that we actually provide to our members at Earnings Beats. If you're also a member at Stock Charts, extra member or above, and you can get a 30-day trial there for free at Earnings Beats. If you come into Earnings Beats, and obviously you should subscribe to the free newsletter, but if you want to join our membership, there's a $7 trial. If you click on that join today, down here, this is a 30-day trial special, $7, but you're going to get a refund within 5 to 10 business days. So essentially it's a free trial at Earnings Beats as well. get the Earnings Beats free trial, get the Stock Charts free trial, download these 2 chart lists into your account at Stock Charts. Very, very important. And when you go in, once you sign in to Earnings Beats, there'll be a chart lists area here under members. That's where you go to get in. So let me just show you quickly how you can access this. But once you go into the chart lists, if you scroll down, you'll see accumulation distribution chart list, strong ADCL, weak ADCL. Simply click on those and it'll prompt you for a password. You don't enter your Stock Charts password. You don't enter your Earnings Beats password. You enter this specific password for this chart list. This specific password for this chart list. Once you do that, it'll prompt you to just download it, save it into a new chart list at Stock Charts. It's so simple. 5-10 seconds, literally. Once you become a member, you'll have these stocks in your account. And then once you have them, it's pretty cool because I can then go in and, as I just showed you, I can do a summary where I can pull these up. I could also, on the strong AD, you've got these different columns that you can choose from. If you put in here sector and industry, and then come out of here and type in, I just said healthcare, you know, if we get a breakout, you want to really be paying attention here. Well, look at what happens if I type in healthcare. I get all of these. Now I could sort, let's also bring in the scooter, which is the Stock Charts technical rank. So I've got them by healthcare. Now let's flip it and say, give me the best looking scooter scores within healthcare. That's how quickly you can get to the best stocks on the strong AD chart list within a key area of the market. Very impressive. You can see a number of these stocks did extremely well yesterday. All right, let's keep moving on. Let's move to earnings. So a lot of earnings out. Earnings just starting to pour in. I'm going to try to go through these pretty quickly. Electronic Arts came out yesterday after the bell. They had a great report. Let me give you their beat or miss. I'm pretty sure they beat on both top and bottom line. Yeah, Electronic Arts beats on both top and bottom line. They guided their revenues higher, their earnings per share lower. So a little bit of a mixed guidance call, but you can see the stock broke out. It's down pre-market. I'm going to say, let's go back and look at this chart. I think anything back down close to the 20-day moving average would be pretty strong. Look at the AD here, accumulation distribution, breaking to new highs. This is what you want to see. Companies that on the move lower saw their AD line move to new highs. That's pretty impressive, but that is continued. I see a lot of accumulation here. Any kind of a gap down, movement down close to that 20-day moving average, I think is an opportunity. Next up is Activision Blizzard, ATVI. Another one that was breaking out yesterday. Let's get a quick update on what's going on in pre-market. Stock is up 8%, 74.11. So Activision, that's Blizzard's going to get a huge gap up. I'm not a big fan of chasing these stocks into their earning, you know, after they've come out with earnings if they gap up. I'd rather just be aware, you know, nice report, great looking accumulation distribution. And so if later, you know, next few days, couple weeks, I see the stock pulling back and I get a chance, 20-day moving average, I think that's going to be a great opportunity. MELI coming out with some very good numbers. They beat on both top and bottom line. Stock up 17%, $110 to $731. Looking at the chart, it gapped up above the 20. It's been holding above the 20. I'm looking at this market and trading it as though we're in a bull market. Now, there are areas of the market, many of those stocks on the weak AD chart list, I would avoid. But that's no different than any other bull market. Not every stock goes up in a bull market. Stick with what's working. You've got stocks like MELI. Now, I'm not saying I would have held this one into earnings, but it has been trading much better. Got through its 20-day moving average, has pulled back, is holding. When it went down in March, it never set a new low on the accumulation distribution. I think that's a good sign. So I would expect the stock to continue to trend higher. Now, predicting the 117-point gain would have been hard to do, but the stock is currently trading at 731, and 750 is the recent high. So I have a feeling it's going to struggle if it gets up close to that 750, 740, 750 area. So if I was holding it into earnings, I'd be very tempted to take my gains at the open. Beyond Meat reported. And you can see the stock closed yesterday at 100.16. They beat on top and bottom line, but they suspended their outlook, which is not much different than a lot of companies. Stock is up 11%, 111.51. Again, you go back. I'm going to pull up and see what that high was. That high candle body here was 111.92. If I were to get an open here of 111.93 or higher, I would be more bullish on this stock than if it opens below. Just based on my experience, market makers determine where a stock will open based on supply and demand, prior to the open. I think it's meaningful when you have a key resistance area like this, 111.92, which way do the market makers open at 9:30, above or below that number? We'll see. But right now it is trading very close to that 111.90, whatever number I just said, 111.92. So let's see which way it goes. Disney. How about Disney? Disney, you can see, is back down near 100. They came out, mixed report. Obviously, they've got the amusement park, which with COVID-19, you're not going to get large gatherings of people. So that's going to take a big hit. But Disney also has Disney Plus. It's got Hulu, ESPN, and some other things. And Hulu, I think year over year subscribership, or I'm not sure if it was subscribership or revenues, but it was up 27%. So you've got pockets of Disney doing very well. The stock opening up 25 cents or 0.25%. And so it's still going to be right near the support level. I'd really want to hold 100 on a closing basis on Disney. So if it goes down and trades down, say 96, 97 intraday, comes back up and gets through 100, that might be a decent trade where you could then keep a stop down below that intraday low. Something to think about on Disney. Planet Fitness. So many companies that have been hit hard by this pandemic. Planet Fitness, one of those, hit the hardest, from $90 down below 25. It's actually come back quite a bit, much more than I would have expected. It's one that I don't trust as much, but you can see how quickly the AD line broke out to a new high here. So there are a lot of folks accumulating Planet Fitness. I don't know that I would be one of them, but hey, I'm not going to argue with what's going on the chart. If we take a look at the reaction, the stock down about 2% pre-market, around $56. Taking a look at the chart. Yeah, I mean, if we gap back below, I think if you lose about $54, I'd be careful here with Planet Fitness. This is one that I think is going to be, I don't know. I've got a gym membership, and I'm not anxious to go back to a gym right now. I've kind of been doing my own exercising at home, and I think a lot of folks have been doing that. So, which brings me to another chart that does report after the bell today, Peloton. And Peloton is back on a roll here heading into earnings, very close to an all-time high. It's never closed above $37. Maybe that happens today before their earnings come out after the bell. But one thing I really like about the stock, and I wrote about it, can't remember if it was in Don't Ignore This Chart blog or in my Trading Places blog, but one of the things I really like about Peloton is that it has a huge amount of short interest. So as it moves higher, if it makes a breakout, especially an all-time high, if you're sitting on a short, you've got unlimited risk. That's the difference between going long and going short. Going long, what your risk is. Whatever you invested, stock's not going to go below zero. On a short, you can go up for infinity in theory. So shorts have a really tough decision to make when you get a breakout. And that's why short squeezes can be so powerful. If you want to know what can happen during a short squeeze, check out Tesla when it had the weekly, look at this weekly chart. You see this breakout right here? I wrote about this stock in Chart Watchers. I think it was Chart Watchers back at the end of December. On this breakout, I literally said Tesla's got more than 20% of its float short. And look at what happened when it made the breakout. Peloton has over 40% of its float short. So if it comes out with big numbers tonight after the bell and it gaps up I don't know. Yeah, I think it could be an explosion to the upside on Peloton. We'll see. Everybody's got to take their own, evaluate your own risks. It's certainly a volatile stock and one that, could go the other way if the numbers don't pan out. So you got to be willing to take that risk. I can't provide you any kind of guarantee, that's for sure. But it is one that I think looks very interesting given the level of short interest. Another stock I want to mention with earnings here, EVBG. This was a really nice report. They beat top and bottom line. They guided their Q2 revenues higher, and they guided fiscal year 20 revenues and earnings per share higher. So back in March, when the market was going down and Everbridge was breaking out, and now it's been going sideways, why was it breaking out during the pandemic? Well, here's your earnings report. Now you're getting the fundamental news, which is why I continue to say, and this is coming from somebody who was in public accounting for 20 years, I don't, I love fundamentals, but I'll take the charts every single time because the fundamentals weren't telling me anything back in March. The technicals were. Now the fundamentals are coming out and backing this up. But EVBG pre-market up 9%, $10 to 123 and change. Watch to see where this one opens. I know it's 123 right now. Got a few more minutes to go before the opening bell. 124.71 is a number I'd be watching. If it opens above that, I think you got to be, thinking that the stock's going to go higher. If it opens below that, may trade above it intraday, but then it's going to be really important to see where it closes. Because if you open below resistance, move up above it during the day, and then come back down and close below it, that could be a short-term top. So where it opens, where it closes today, going to be big for EVBG. Shopify reported this morning. So Shopify going into their report, look at the huge move up. Well, they beat on the top and bottom line, but they lowered their fiscal year 20 revenues and earnings per share. So how did the market react? Down $10. Not bad, actually. When you're lowering your guidance going forward and you've already got all this built in, you think you need perfection for an earnings report. They actually lowered their guidance. The stock's still holding up really well. I think we could get a sell-off, but I'd be watching that 20-day moving average. I think Shopify would look pretty good there. One other one I wanted to mention, Wingstop. This is a company that I've liked for a while. I gave this one on March 1st back during the pitch, which was a Stock Charts TV show. One of my 5 stocks that I like. This one along with Peloton and 3 others. But look at the move to the upside here. Look at this AD line. Wingstop came out. They did beat on their bottom line, inline revenues. And after the news, stock up another $2. So Wingstop currently at 123. Looks like another breakout here on Wingstop. All right, let's see. Upgrades, downgrades. I can give you a couple here. CBOE upgraded this morning. Look at the accumulation distribution. I don't trust this upgrade. I think it's going to be very difficult to get through 105. So even if it went up a couple bucks, if I was shorting, I would be shorting a stock like this. Now, it is in the financials. I said earlier with the 10-year Treasury yield up, maybe this finally ignites the financials. So maybe shorting wouldn't be such a great idea. I'm not a big fan of shorting anyway. I think we're in a secular bull market. I only want to trade on the long side. But for those of you who do like to short, this one could be interesting. PANW also upgraded this morning. That's Palo Alto Networks. This one looks a little bit better in terms of its accumulation distribution. I need to see it break up above about 204, 205, though. We'll see. To the downside, AIG was downgraded. Not a surprise. I wrote about this one Friday in the newsletter. I didn't like it. Stock traded well off its high yesterday, came back down. Look at the accumulation distribution. I did have a member write to me and say something about, didn't I say that AIG would be going bankrupt or something? Just want to clarify. I never said anything like that. Only thing I said is that the stock did not look like it was going to come out with a good report. And it didn't. Their earnings per share came in way below expectations. It was like 10 cents versus 80 cents or something like that. So I don't like the stock. If it were to break out above 27.50, I'd reevaluate. But as long as it holds below this 50-day moving average in 27.50, I think we got downside action here. Other downgrades, Pinterest, PINS, Snap, and Trip all downgraded today. All right, 3 you must see. I'm going to start with ATRS. Some of these stocks are pulling back, and I think they create opportunities. ATRS is kind of a risky one. It lost its 20-day moving average, but the accumulation distribution was looking really good until yesterday with that big red candle and the heavy volume. Look for a reversing candle here. That could be a sign that maybe a bottom is in. Next up, KHC. This one also has gone through some tough times here over the last week or so. It was one of the bigger movers in the scooters to the downside recently. Look at the AD line staying very strong. I actually think this one's going to bounce off the 20-day. We have actually opened. KHC is up 11 cents, but I wouldn't be surprised to see this one move back up toward 31, maybe even above 32 to challenge that November high. I think KHC looks pretty good. And then finally, PKG. I like this stock. It was in a downtrend. Look at the accumulation distribution, very strong. And I see a triangle. And normally off of a downtrend, when you get a symmetrical triangle, see these lower highs, see the higher lows, and we're squeezing in this triangle. Normally, I would expect a break to the downside. But we had pretty good accumulation distribution. And with volume, we broke to the upside. Anything close to that 20-day moving average, I think, looks good. So PKG is my final of the 3 you must see. That is it. Let's get one quick update of the market, and we'll wrap this thing up. We've got currently NASDAQ up 63, Dow up 123, back up above 24,000. We'll see whether or not we can get through the 25,000. I think that's going to be a bigger level for the Dow. S&P back up to 2884, up 15, getting off to a good start today. Again, let's see if we can sustain this throughout the day, but not a bad start to the day. Everybody have a great day. Be back later today for all the Earnings Beats members with my daily market report. Everyone have a great day. See you later. Happy trading.